BTC Bitcoin. It's called digital gold, or better known as Gold 2.0. Does this mean it's the next iteration of our world's hardest and most sound money, or that it's about to suffer the same fate gold has for the past 50 years? Price suppression, manipulation, naked shorting, and more. We'll find out in about 10 minutes because it's time for Chico Crypto. Yeah, gold and Bitcoin, they share many similarities. Here are the most important ones. Number one, they both have a fixed and limited supply in this world. There's only so much gold to be found and mined across planet Earth. Same with Bitcoin. Although with BTC, we know the max supply will only ever be 21 million coins, and we can estimate when the last one will be found and mined. With gold, the max supply on Earth is unknown. Number two, both cannot be replicated and counterfeited. Real gold is real gold. A person cannot make more even if they wanted to. The same goes for Bitcoin. Number three, both are unstoppable and don't rely on third parties. The only way you can seize gold is by taking it with physical force. The only way you can seize Bitcoin is by taking it with digital force. So the two share the same properties, yet the big difference between the two assets is just that. One is physical and one is digital. The digital properties of Bitcoin give it many benefits over gold. It's uniquely divisible. It can be transferred across the world easily and cheaply. It's fully auditable. Thus, Bitcoin has earned the nickname Gold 2.0, and from Bitcoin's price action since its inception in 2009, rightfully so. But could 2.0 mean something different, like Bitcoin is going to follow in the footsteps of gold, transforming from the world's most valuable asset to the world's most manipulated? Now, gold was beloved by nations for millennia, traversing as the world's store of value through empire after empire. And even with the creation of paper money, it was used to back a currency's value. Although within the last 100 years, that has changed, and gold has become enemy number one in the world's biggest superpower's eye. The United States hates gold as it threatens their paper currency, the US dollar. It all began in 1944 with the adoption of the Bretton Woods Agreement and International Monetary System. Delegates from 44 countries came together in Bretton Woods, New Hampshire, towards the tail end of World War II, looking to form an efficient international monetary system which would allow the nations to flourish post-war. And all countries prior to this were using the de facto gold standard, where their currencies were backed by gold, and citizens could freely exchange paper money for its gold backing. In a globalized and connected world, this de facto gold standard was very inefficient. So after the chaos of the interwar period, there was a desire for stability, with fixed exchange rates seen as essential for trade, which they thought would result in economic prosperity for all. So the new Bretton Woods system was introduced, where gold would be fixed to US dollars at $35 an ounce, and the other currencies of the world would be fixed to the US dollar. Thus, the US dollar took the leading trade role, while gold took the back seat of just backing the world's exchange currency, USD. After Bretton Woods, the world got used to the US dollar being the dominant force of which everything was traded against. But this started to come towards an end 30 years later. During the 1960s, a surplus of US dollars caused by foreign aid, military spending, and foreign investment threatened the USD, as the United States did not have enough gold to cover the volume of dollars in worldwide circulation at a rate of $35 per ounce. There was actually more than 4 times as many dollars in circulation as there was in the gold reserves. So the US announced a war against gold. Then President Nixon announced this in August 1971.
Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets. We will press for the necessary reforms to set up an urgently needed new international monetary system. Stability and equal treatment is in everybody's best interest.
US dollars were no longer convertible into gold, aka the US dollar officially abandoned the gold standard, and this was the establishment of a new monetary system completely reliant on the USD. The war against gold had begun. Checking out the price of gold post-Nixon shock, the price of gold skyrocketed from that artificial $35 range it had been held at for decades, and by December of 1974, gold reached over $183 per ounce, as people saw stronger value in gold than fiat currencies that were running the globe, especially the US dollar. So what did the US do to the biggest threat to US dollar dominance? They launched futures trading against the asset in an effort to stifle gold's growth against the USD. In 1974, the first gold futures contract was traded on the COMEX exchange in New York. And as we can see back at the price chart, post-futures trading halted gold's run. By 1976, gold dropped down to about $110 per ounce, as speculators could now bet on the price going down. They could make money with crashing gold prices. But this wasn't enough to halt gold's rise, as these initial futures contracts had to physically hold the gold they were trading for redemptions. From 1976 to 1980, gold went on a tear, 6xing its price to a peak of around $650. The US had to do something to control the price of gold, so they and the gold trading powerhouses like the London Bullion Market Association allowed the introduction of unallocated accounts, where trading contracts and firms didn't have to store the physical gold for redemptions. This allowed fractional reserves. This allowed the paper trading of gold. This allowed the supply to expand past what was actually there. And if supply outweighs demand, you get falling prices. The unregulated expansion of unallocated gold derivatives held gold in check for decades. As we can see, gold went into a 20-year bear market, reaching a low of $260 in the year 2000, and it didn't reach back to its previous all-time high of $650 until 2005. And 15 years later, even with the 2008 global recession, the global Rona panic, and more, gold has only grown up to a peak of $2K USD. Gold is still being manipulated to this day, per this Justice Department press release. Former JP Morgan traders convicted of fraud, attempted price manipulation, and spoofing in a multi-year market manipulation scheme. The article states, the evidence at trial showed that between approximately May 2008 and August 2016, the defendants, along with other traders on the JP Morgan Precious Metals desk, engaged in a widespread spoofing, market manipulation, and fraud scheme. The defendants engaged in thousands of deceptive trading sequences for gold, silver, platinum, and palladium futures contracts traded through the New York Mercantile Exchange and Commodity Exchange Inc., COMEX. These deceptive orders were intended to inject false and misleading information about the genuine supply and demand for precious metals futures contracts into the markets. But this manipulation and unallocated gold bonanza may be coming to a swift end, as the US government has a new enemy of the US dollar, Gold 2.0, Bitcoin. BASEL III, an international regulatory accord that introduced a set of reforms designed to mitigate risk within the international banking sector, is coming, and it requires banks to maintain certain leverage ratios and keep certain levels of reserve capital on hand, with huge implications for paper and unallocated gold. From this infographic, we can see under BASEL III, new funding requirements will make it difficult for banks to hold unallocated gold. This could be the end of the paper gold market as we know it, allowing gold to rediscover its true price. And from this BIS article released just last week, we can see they say this regarding BASEL III implementation. More than 2/3 of jurisdictions plan to implement all or the majority of the standards in 2023 or 2024, with the remaining jurisdictions planning to implement BASEL III in 2025. This includes all major countries, including the United States. So gold manipulators will be booted to the curb in the next few years across the globe. But they have their eyes set on a new target, Bitcoin, aka Gold 2.0. In late 2017, the first Bitcoin futures contract was launched by CME, the Chicago Mercantile Exchange. And from the launch article, we can see they say CME Group's Bitcoin futures will be cash settled. These are paper Bitcoin futures, aka unallocated Bitcoin accounts with no Bitcoin backing them. As we can see from this January 2021 article, CME has become a dominant force in the futures markets, for a time being the #1 futures exchange. So what does this mean? Well, Willy Woo, top Bitcoin analyst, put out a thread which explains what is going on and will happen. He starts with a dummy's guide to selling 42 million BTC. Wait, I thought Bitcoin only had 21 million. Well, he begins with the introduction of futures into crypto, starting with Arthur Hayes. He then says, now along comes the CME. They launched a BTC casino where you could front USD to play. Wall Street hedge funds love that. What's the limit on selling BTC now? Unlimited. Fiat is unlimited. Value of all BTC, 0.37 trillion. US dollars, 22 trillion. USD printed in the last 12 months, 1.1 trillion. Theoretical shorting power with fiat currently in the system, lots. It's billions of BTC. BTC doesn't have to be killed. It just needs enough shorts in the system to suppress the price. Without a large market cap, BTC doesn't get to make a global impact. Presently, the arc of SEC policy has been to increase futures liquidity and dominance by approving multiple future ETFs, while rejecting all spot ETFs. This is now a political game. Yes, my friends, they will now allow naked shorters to suppress the Bitcoin price just like they did with gold, with paper futures. But they will never allow a spot BTC ETF, as that would mean the supply couldn't be manipulated and increased. Bitcoin is taking gold's place in the manipulated markets of this world. Cheers, I'll see you next time.